Welcome back to our free financial planning series, where we're walking you through the framework that our clients pay us thousands of dollars for. If you haven't watched the first two videos, be sure to go back because each of the videos build on each other and we don't want you missing a key part of your financial plan. Today we're talking about something that most people ignore until it's too late: insurance and risk protection. It's not sexy, and it's one of the most impactful parts of your financial plan. Without the right coverage in place, one unexpected event could wipe out decades of progress. So hi, I'm Erin of Truly Aligned.
And I'm Maximilian of Truly Aligned.
Today we're diving into risk.
Similar to a house, if you're going to build a house, you need to have a strong foundation. In order to have a robust financial plan, you need to have a strong foundation. Throughout your career, there's different type of insurance that serve different purposes. So when you're early in your career, it's really crucial that you're properly protecting your future income through disability insurance and life insurance. Later in your career, when you're about to retire, having a long-term care policy is really crucial. And throughout that entire time period, it's making sure you have the right amount of auto and homeowners insurance and an umbrella policy that's overarching on top that provides an additional protection. If you've ever been to the circus and they have the trapeze artists that are flying through the air, below them, if you look closely, there's nets. And those nets help catch them if they were to fall. So when it comes to insurance, we want to make sure that we have a net underneath to catch you if something was to happen unforeseen.
So let's talk about the different types of insurance that are important for your financial plan. Life insurance protects your income if you were to pass away prematurely and could no longer bring in an income. This is important because if you have dependents like a spouse or children that rely on your income, if you're no longer here, you cannot bring in that income. A good rule of thumb is to have 10 times your salary in life insurance. And this is specifically talking about term life insurance. Term life insurance is very inexpensive and it can last for a term of 10, 20, 30 years. The amount of coverage you get in the term is based on the goals and how much coverage you need or want for your situation.
Insurance companies all look at risk differently. So just because you get a health rating through one insurance company that's X amount of cost per month, you may be able to get a lower cost through another insurance company. For a lot of people earlier in their career, especially if they've had kids, they always think about, I need to get life insurance. Though you're actually a lot higher likelihood to become disabled. So what disability insurance does, it protects your income. Typically, the largest assets you have is your ability to work. If you are a W-2, a lot of times you have group disability coverage. It typically covers 60% of your salary. So the majority of the time for that plan, if your employer pays for it, that 60% is taxable. So your actual take home is, say, closer to 40%. The other distinction in group coverage, it normally doesn't have the best definition of disability, meaning it's harder to actually qualify. So making sure that you have coverage that covers your specific occupation is really crucial, especially if you're specialized like a physician, a dentist, or an engineer. On the other side, there's what's called private disability insurance. The advantage is it typically has a lot stronger definition of disability. Additionally, that benefit amount you receive is all tax-free. The other coverage to look at is what's called long-term care insurance. A lot of our clients look into this coverage around 55 years old, and what this coverage does, it helps protect you if you need to go to nursing home, have dementia, have some sort of surgery. You can access benefit tax-free in order to help cover those costs. And for the majority of Americans later in their life, estimated currently that 4 out of 5 Americans need some sort of long-term care policy. The probability of you using it is the highest out of any of the insurances that we're talking about today. The crucial part for life insurance, disability insurance, long-term care is the sooner you lock in that coverage, the sooner you lock in your health, meaning that they can't take that coverage away from you even if your health changes, and locking in lower insurance rates that are based on your age. For property and casualty insurance, that is protecting for your auto, which is auto insurance, your home, homeowners insurance, if you're renters coverage, and then umbrella policy, which is overarching on top of everything. So for a lot of our clients, what we look at is you want to make sure you have auto coverage that not only protects your vehicle itself if you're in a car accident and that cost, but additionally, if you're deemed at fault, to make sure you have proper protection to cover all the people that were in that accident. Similar to auto insurance is your home insurance policy. Not only do you want to have proper protection of your house, but you want to have protection if something was to happen at your house. If you have kids and somebody gets injured and there's some sort of lawsuit or litigation against you, you want to make sure you have above and beyond what you need in that circumstance. And that's really what comes in place as far as umbrella policy. We like to think umbrella policies, that's the largest umbrella on top of your property and casualty insurance, your auto insurance, your home insurance policy, and it gives you an additional layer of protection that if something was to happen, you're taken care of.
The umbrella policy could cover you $1 million all the way up to $10 million. It's important to decide how much coverage you need based on your goals and how many assets you have that you want to protect.
It's really crucial to make sure that not only you're protecting the assets that you have, but also protecting against future lawsuits that may happen.
When it comes to all of these insurance policies, there's different riders that you can have attached, and there's different benefits that you can add in on top of the base policy. That's why it's important to work with an agent that you trust so that they can not only explain the different riders that are available, but also talk about the ones that are important for your situation and your goals.
Be aware that insurance agents only make money if you get a product through them. They get what's called a commission. The commission is cost neutral, meaning if you go directly to the insurance company or use an agent, you still pay the same cost. Sometimes there can be an incentive for the insurance agent to sell you potentially something that you may not need, as they can get a larger commission. That's not always the case, but it's something just to be aware of as you're going through this process, that you want to make sure that the person you're working with is on the same side of the table as you, not the opposite side of the table. There's what's called a captive agent, where they work for a specific insurance company where they can only offer that insurance. So you can think about that as like Farmers, State Farm for auto and home, or Northwestern Mutual or New York Life when it comes to life and disability insurance. Those agents are only able to offer that company. The other type of agent are what are called independent agents, in which they can offer a wide variety of different insurance companies to you. So a lot of times it can be helpful to have that independent agent in which they can shop out the market and find the best rates for you. Sometimes it can be better to work with a captive agent, as they can have some of the more competitive rates specifically regarding your auto and homeowners insurance.
Just know that you can shop around, you can look at different options, different products, and different prices. In the next video, we're getting into the fun stuff, how to actually start structuring your plan. We'll walk you through what to prioritize, where your money should go first, and how to make progress. Make sure to subscribe so you don't miss it. And if this video helped clarify anything for you, let us know in the comments below. Until next time, stay aligned.
Stay aligned.